It was a weeknight in financial markets last night with shares slipping, the New Zealand dollar declining and commodity prices easing. New Zealand dollar traded in an 100-point range. It had ground up to around 71.50 against the US dollar, but in that weak night it slipped down, but it found pretty reasonable support around the 70.50 mark against the US dollar. Commodities eased, the CRB index down about 0.6%, and amongst that we saw soft metal prices and oil prices eased further overnight. In terms of data, it's a pretty light end to the week. The main focus last night was a Philadelphia Fed manufacturing survey, which captures manufacturing activity in the Philadelphia region. That slipped into negative territory, signalling the possibility of contraction for manufacturing in that part of the states in the months ahead. And we also had the weekly jobless claims data out of the states. That was disappointing, with 500,000 new applicants for jobless claims in the states. So it's just continuing that run of disappointing economic data that we've been getting out of the states lately. And that saw equity markets slide and the sentiment remained fairly weak in the states last night. There are a couple of things for the market to focus on in New Zealand yesterday. We had producer prices and the capital goods price index out yesterday. The producer price index showed output prices jumping by 1.1%, and dairy prices were one of the factors in that increase. It's old news really though. This is talking about second quarter data, and the market doesn't focus on it too much, given that it's capturing what happened in the second quarter, and of course we're interested in the outlook for dairy prices rather than what happened back then. But nonetheless, it was out yesterday and gave the market a little bit of a focus on what's happening in prices. More of a focus was on Dr. Alan Bollard, who gave a speech yesterday. He was talking about inflation expectations, and the market honed in on that, and it was a little bit dovish, and the market's really pared back their expectations for rate hikes from the RBNZ over the last week or so. That speech added to the mood, and now the market's only got about a 40% probability of a rate hike priced in for the September meeting. So yesterday we saw wholesale interest rates ease slightly on the back of that line of thinking, and far less chance of a rate hike priced in than even what we were seeing at the beginning of August, when the market was thinking there was a greater than even probability of a rate hike from the Reserve Bank.